we should be live. We'll see.
Hey, what's wrong with you? You're looking kind of down. 'Cause things ain't getting over.
Hey guys, give us just a few minutes so everyone will join in, and in 1-2 minutes we can dive in. Okay, just the last minute, and okay, perfect. Okay, so Ken, would you mind if I'll start and I'll just briefly go through the Euro Australian dollar, and then I'll announce the new giveaway, and then I'll pass the mic to you and you can dive in.
Take it away, Maestro.
Perfect. So hey guys, welcome to another live stream session. Today is the first one on Monday. We'll be probably doing more on Mondays and also on Wednesdays. About the giveaway, I'll mention it in a few moments. Before we dive into actually the giveaways, I would like to just briefly share my point of view on Euro Australian dollar, because we were talking about it on last stream. So let me share the screen. Also, the ECB delivered the rate cut at 25 basic points, right, if I'm not mistaken. And it was pretty hawkish. We shall see this week, because we've got the German CPI and French CPI. So if they tick up, we might get even more volatility on euro. Oh, wait, let me share the screen. Okay. Can you confirm if you can see my screen?
Yep, all good.
Okay, perfect. So this morning, if you go watch the last stream, I said that if we're going to reach 1.75, I'm going to take those longs on Euro Australian dollar, because I've been talking about them since maybe the first live stream, and I took at the 175. Right now we're getting some bullish momentum, but I'll be probably keeping those longs till we break below. If we do, then actually I'll be closing it. But since we don't below this zone, which is 175, 174.8, till that happens, I'm still very bullish on euro. Not only because they delivered hawkish rate cut, but as Ken said several times, there's a really good flow to euro. As it is now pretty stable economy. At the same time, Australian dollar still, for me, one of the weakest indexes or currencies, not only from the technical standpoint, but also fundamental. RBA is about to deliver more rate cuts. Also, we are going to have this week, on Tuesday, if I'm not mistaken, depends on at the time zone, the NAB business confidence and Westpac consumer confidence. So we shall see how consumers and businesses and their outlook on the Australian economy. Maybe I can bring the data here. Trading. Give me just a moment. And yeah. Okay, so we've got the Westpac and business, which is, if you're going to trade Australian dollar, you should be watching for those, especially in that business confidence. If we're actually going to end up on -3 or even -1, -2, that might be another hit for Australian dollar. So I would just look out for those two. If you got worse numbers than the last time, than the previous ones, then we can confirm that Euro Australian dollar longs. Also on Friday, as I've mentioned, we've got the German and French CPI. Did I miss it here? Is it on Wednesday or actually on? Okay, I'll confirm probably later because I think we have them. Yeah, here. Okay. So French and German inflation data, the two biggest economies of Europe. So actually pretty important data. So yeah, this is from me, at least for the Australian Euro Australian dollar. If you want to see the whole analysis, it's on the last live stream session from previous Wednesday, so you can check it out. And I'll probably provide more as Ken dives into the analysis, his weekly analysis. Just briefly about the giveaway, we are going to do 2 giveaways. One will be on Instagram, the second one will be on the live streams. And today we are going to have the first one on live streams. Throughout the throughout the live stream, I'll be asking questions either at the bottom, so I don't disturb Ken all the time throughout his analysis. So either on the bottom there will be the question, or eventually I'll just jump in and ask you guys something regarding markets, and then you can answer in the live chat. The first one, probably this is the easiest option that I've got. The first one who answered that question correctly, I'm going to connect with him and he's going to be provided the free evaluation. I hope that's okay with you guys, because I haven't really found an easier option how to do it on our live streams. Eventually, if you're the one who answered correctly, you will be given the account, but I need to connect with you on Instagram. So if you're the winner, just go to your YouTube channel or YouTube profile and just include your Instagram nickname so I can verify that you are actually the person that I connect with on Instagram. And then after we connect on Instagram, I'm going to provide you with an account. I'm going to also remind it on the very end, but there will be more questions. With every question, there's going to be one free evaluation account. Maybe might be 2 winners for every question. I don't know how many questions we will have, but basically this is going to be held on every live stream. So I'll just pass the mic to Ken. I'm going to write down some questions for you guys, and whenever you see it displayed on the bottom or me asking you guys, well, I'll remind it, just answer in the live chat and I'll collect the winners. Okay, so that's as for the Euro Australian dollar and the giveaway. I'm going to stop sharing my screen. So you can take over if you want, and I'll just go prepare the giveaway.
All right, cool. Cheers, Jake. Nice one. Share entire screen 2. All right, guys, happy Monday. Hope we're all well. It is a typical Monday today in the markets, to be honest. It's quite quiet. I was preaching something. I was talking to someone the other day, just reminding people, like, excuse my vulgar language, but trading is supposed to be fucking boring. When we're waiting for certain levels to come into play for us to execute, when we're in trade and trades goes in positive, comes back down to break even, goes to drawdown and repeats that process for a long time, that can be boring, and that's just what we have to accept. And today, right now, trading is quiet. You have to remember Monday is a day where typically people, you have to remember these markets we are not the big boys in these markets. The big boys are the guys sitting there in the banks, the institutions that are moving the real money. And these guys get to their desks on a Monday morning, believe me, because obviously I was an analyst, I was a T-boy, on the trading floor. I understand what people do. They get to their desks and they adjust their portfolios accordingly, make sort of a bit of housekeeping, if you like, and then obviously position for the week ahead. There isn't a lot of big execution that happens on a Monday. The big execution happens on the Tuesday. So today is sort of a planning day, if you like, for the week ahead. So it's just a typical Monday. right now. But there's still some things for us to talk about and for us to get ready for obviously this week. I'm just starting off with gold because I had some trades on Friday, and obviously, you know, as we always say on the streams, gold is a very popular one at E8. You know, particularly obviously people going long. There's a record amount of like gold buying right now, sort of on a, you know, on an institutional level, sort of big central banks, big sovereigns. Everyone is buying gold. Obviously, you can see that it's just sort of one directional right now because of all the uncertainty, because of the risks, the geopolitical risks, the inflation that we've seen. You know, remember, gold is that asset that's best to hedge against inflation, you know, rather than keeping your money in a savings account where you're on piss all in terms of interest rate and the rate at which inflation, you know, inflation, the price of our living costs, our goods and services, the way that compounds over the years. Money in your savings account is doing nothing. Okay, it's being eaten alive by inflation. So if we want to obviously try and earn some yield, or the smart money, they want to earn a yield rather than a traditional savings account. They want something a little bit safe that can earn a yield, they're looking at gold. Obviously, this is not me giving you investment advice. This is what a lot of people do in terms of shaping up their portfolios. They're buying gold, okay, to diversify and to protect against inflation. So in times of inflation, in times of uncertainty, in times of all these tariffs, gold is still a great buy, and it remains to be the case of dip buying. Okay, we continue to buy the dips. When you hear that term, when we have a pullback, big players, institutions are looking to buy those dips, see it as quite attractive. For better value of price. So I did actually go against the grain on Friday just because it was a quick scalp opportunity for me. I was expecting to be a quick scalp, and basically price action if we start off on the weekly moment, all right, I'm still bullish gold. From the monthly, I'm still bullish. Weekly, I'm bullish. We've been in this sort of consolidation really for the past 1, 2, 3, 4, 5, 6, 7 weeks. We've done nothing. Okay, the price is just in this tight range. You know, it's a very tight range that we've seen for a little while after obviously these explosive moves north. On the daily, so when we look on Thursday, price action had sort of topped out, right? We effectively set the precedence for a potential break of structure. You know, we're printing, if you look here, we're printing higher highs, higher low, higher high. And then when we start sort of forming these candles here, I see that as an opportunity potentially for us to curl over, the price to come back down and retreat. And we saw just that on the 4 hours, just monitoring how we had this, you know, we were flirting between zones. We had this little bit of a head and shoulders, the left shoulder here, the right shoulder. And I was just watching this. I was firstly watching it on the hourly. You see how many times this zone was being tapped. And people have the argument like the more the zone gets tapped, you know, when we're knocking on the door in a zone, the stronger it is. Well, no, it's not true because it weakens it. Imagine someone punching, you know, a brick wall. You know, it's not going to strengthen that fucking brick wall if you're punching it. It's going to eventually get broken down, you know, and that's sort of same sort of thing when it comes to zones. When they keep being tested, eventually you're going to get breakdown. And when we have these zones, you'll notice at times when we get breakouts of zones, like we had a breakout here, okay, we had a breakout here, which I capitalized on. When we get these breakouts of zones, typically people, so say for example here, people were short at this zone, all right? We've got a lot of stop losses on shorts here, okay? So eventually when it breaks through, because it's been weakened down, we get what's known as stops being triggered either to the upside. So all those people that were short there, their stops, all those stops got taken out, okay? The same sort of thing here, where people were long gold, there were some stops here, and where we were knocking on the door so many times, eventually people that were long there had their stops taken out to the downside. So we had stops triggered to the downside. So you can keep an eye on those sort of things when we're at these key zones. So yeah, I ended up getting on the 5 minute because I was watching this knocking on the door. I was waiting for that sort of surge of volume. We had a surge of volume coming through as we broke it here. And I ended up getting on this candlestick at 33.38, which is on Friday. Now, the reason being for that, just a couple of reasons. Firstly, first things first, obviously we had the volatility of non-farm payrolls. Now, let me just bring this up here now. Okay, with non-farm payrolls, this is me being pessimistic. The data's still, the data's still slowing down. Okay, now markets obviously get excited, and this is where the big boys remain on top because they don't get fixated and overstimulated by the headlines. But when you look obviously at the headlines, yes, all right, non-farm payrolls was better than expected. Okay, it's better than expected, but it's still slowing down. When you look at the grand scheme of things, look at where job creation was years ago. In 2022, look at these big numbers. Bam, 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 bam. Obviously a couple of misses there. But now look at the average. We're starting to generally slow down. The previous numbers are getting revised consecutively to the downside. I keep mentioning this, that the numbers coming down. Okay, unemployment rates remain steady at 4.2%. Steady is okay. The weekly unemployment claims jumped up in terms of the average, 247,000 people claiming unemployment benefits. So we're definitely seeing a deterioration in the labor market in the United States. Why this was bullish is because people are like, okay, yes, it wasn't as bad as expected. And two, average earnings, what people are getting paid in terms of money, right, is more. So you have to always remember this stuff, right? Don't let it go over your head when I'm telling you it. If people are getting paid more money, what do you think people are going to do with that more money? They're going to go and spend. Okay, if people are going to go and spend more, what does that potentially mean for inflation, which we we're just talking about for a moment? If people are still spending, prices are going to remain high of goods and services. Okay, if prices remain high of goods and services, what does that mean for the central bank, for the FOMC? Okay, maybe they shouldn't be cutting rates soon, or maybe they need to be keeping the rates higher, or maybe they need to hike rates. Obviously, they're not going to hike rates in this time, but I'm just saying, these are the sort of questions you start thinking, okay, if that means that, what does that mean for the dollar? That's potentially bullish near term for the dollar now. So I am going to back the dollar, right? And then obviously in turn, that's negative for gold. Okay, that's near term negative for gold because of that stronger dollar. Gold is dollar denominated and very sensitive at times to obviously what the dollar's doing. So we had all those reasons. The other reason, quickly, before I get on to speed this up and get onto what I'm looking for now on gold. Oh, sorry, give me 1 moment, guys. Wrong tab. Just want to get up a story here. Oh no, I've got it here. Here we go. This came out on Friday as well, which sparked some optimism. So Trump confirms he had a good call with Xi Jinping, Chinese president. See, this is a big talking point right now because obviously we're in a trade war. They had good talks, and Trump said he's going to fly to China, basically, to try and make some progress. Now, today we have talks in London town. So in the city of London, we've got talks between US and Chinese officials. These guys are meeting to obviously try and make some progress on the talks. In terms of actual timing, I'm not too sure about the specific time, so we'll keep an eye on any further developments on that. But these guys are meeting. So obviously, depending on how this goes, we'll probably see some comments coming out later on in terms of a general summary. Depending on how this goes, this is obviously going to potentially set some sentiment for the markets, okay, for this week. Now, if they go bad, obviously that's going to be good for gold. If they go well, that'll be a negative for gold. And it will potentially be a positive for the dollar because remember, the dollar's been selling because everyone's been running away from the United States. Money's been flying out from the United States and going into other places because of this tariff uncertainty. Anyway, I ended up coming out of these shorts, excuse me. Now, I actually wanted to get out of these shorts. I was looking for, to see how the price responded to this. I wanted to observe it in real time, how the price responded. This trend line? We've been speaking about this for a while. In the previous streams, we've been speaking about this has been supporting the price to the upside since 2025. And we actually did, obviously, as you can see, we got a bounce here, which I missed. And then this morning I was pretty busy. I had meetings. So I missed out. I would have rather have been able to get out as close as possible to this down here. Okay. But the reason why I didn't set a TP on this down here is because I wanted to see how the price responded, first of all, to it. But obviously we bounced and then I ended up getting out literally about a couple of hours ago at 33.15. So somewhere it was somewhere over here is where I got out. About, this 33.15 area we got out of those shorts. Now, let's see. Okay, because on the daily, obviously we've staged in what could be a reversal candlestick. If this forms a nice little morning star, we're going to see some dip buying. Okay, we have the fundamentals to back the dip buying still. Okay, depending obviously how these talks go, because if they go badly, see gold, that'll support gold. If they go very well and there's a lot of progress, then gold could come under some pressure. So right now the daily is shaping up. All right, we may get on the 4 hour here, potentially try and form a double bottom. Maybe come down, try and form a double bottom to extend to the to bounce and extend to the upside. So I'm just monitoring potentially how this daily closes to run some longs. I wouldn't be interested in longs until we get back up to, let's move to stone a moment. I want to see us challenging this area again up here. So you see where you see this up here. come back up to this top area here, I'll be interested in potentially longs, you know, once we get to this sort of region. Once we confirm that we're basically moving back in line with this structure. All right. So I want to see this structure being held. Maybe this is going to be a new higher low here, you know, for an extension to the north. But I want to take out this area of resistance here. And I think there'll be a surge of momentum and then we'll run to the all-time highs. So I'll look at some longs potentially from here. And maybe from here, depends. I'll see how this higher low forms and price action. So a couple of areas of interest for longs for me this week. Now, also, just while we're on the dollar and gold, it's important to note that we have inflation data this week, right? So on Wednesday, so US CPI. Okay, now we've just been talking about CPI, inflation. So you know what it is. I'm sure you do. Inflation's obviously expected to remain sticky in the United States, expected to remain higher, right? Which should obviously back the case for the FOMC keeping rates unchanged. Let me just bring up CME. So obviously we've been looking at this at previous streams. So for anyone that doesn't know, remember this is us checking out the probability, what futures markets, futures traders are expecting in terms of rate action from the FOMC. So if we look at June, obviously we know there's no probability of a change, 99.9% that they're going to keep rates unchanged. July, okay, this has dropped even further. Ahead of that non-farm payrolls report that we just had, this was, I think, about 70% Now it's 85.5% probability that they're going to keep rates unchanged. September's where the volatility is at right now, 61% chance that they're going to cut rates. So obviously, this is how you need to think, okay? If CPI on Wednesday comes out higher than expected, right? Even at these sticky numbers here of 2.5% on the year-on-year, 0.3% on the month-to-month core, you can expect this probability to start changing for September. So further price out July as a possibility of a cut, further price out September as a cut if this inflation remains sticky, because the FOMC will need to keep rates higher. So what would that mean for you? That would mean dollar strength. Okay, that would mean dollar strength. With gold, this is where it gets, you know, this can be a bit tricky because remember I just said gold is a hedge against inflation. So dollar and gold can both rise together. They can both move in tandem to the upside. But there are times when they don't, like which we've seen recently where the dollar's been falling because it's been uncertain. And obviously gold's been rising. So they've had that diverging relationship. However, if the markets start to run with, you know, FOMC are not going to be cutting for a long time now, rates are going to remain higher, which means the yields are going to remain higher, which means maybe money comes back in to the United States because they're offering, because the yields are higher in comparison to other places which are lowering rates. Then obviously dollar can rally and gold can rally. Gold can rally because inflation's sticky. It's a hedge against inflation. But then dollar could also obviously rally on the expectation of higher rates. So yeah, there's sort of quite a lot to say there. Jake, just before I carry on with dollar, would you?
Yeah.
What are your thoughts on that? You know, like that relationship with gold and dollar, and sort of with CPI.
Oh, the upcoming CPI.
Yeah.
Well, depends. I've checked the. Let me also open the watch list. Sorry, the watch tool. And I think the first rate cards being scheduled for September. Is that correct? Yeah. So yeah, if we're going to actually take up, let me also take a look at what is the consensus for it. So we've got on call 0.2 previous, 0.3. So if we're going to take to 0.4, if we're not speaking about the calls, if we're speaking about the inflation rate on annual basis, which is 2.3 or previously, and now its consensus 2.5. If we go anything above 2.5, I mean, the chances for delayed in September there might be high chances for also taking a pause in September. Right now, I believe it's about 50%, 53% for the rate cut. And with higher inflation print, it can go easily below 50 to 40, like for the rate cut. And the pause might be actually on the table more, or the chances might be even higher. In that case, I might see dollar getting some bullish momentum, if I'm not mistaken. So that's probably what I'd be watching if the consensus is met. If so, then I wouldn't be I wouldn't be bullish on dollar. I would remain the same, which is more or less neutral. But if we actually see inflation taking upside, then I'll be probably considering some short-term dollar bulls. Yeah, it's pretty much depends on this print. It's a very important one also.
Definitely.
Yeah.
Agreed. Yeah. Okay, cool. Appreciate that, man. I think for me, guys, like obviously, yeah, Jake's obviously not a dollar bull as such, and I haven't obviously for a while. I haven't been a dollar bull for obvious reasons. And for me personally, even if we see these numbers on Wednesday coming in higher, if these numbers come in higher, inflation sticky, obviously, rate cut bets get pushed back. But then this is very important, okay, as well, the progress here, because markets are really focusing on this right now, because this, i.e. US and China, if this doesn't go well, if these guys don't make progress, this is crippling to the US economy. So higher inflation isn't really bullish for the dollar. Why? Because it means if we've got a slowdown in the United States, which we already know right now, we have a slowdown in the United States, right? We saw it in the previous GDP reading. Growth in the United States is low. We saw a contraction when my computer decides to load of 0.3%. Obviously, that was revised slightly higher to 0.2 for the month for the quarter-on-quarter period. However, this is still bad. So even if inflation's higher and these guys make no progress, is going to be a dollar negative. So any upside that we could see on sticky inflation, I think the rallies are still vulnerable to being sold. So that's sort of my thinking at the moment. All right. Someone just asked in the chat quickly, just because I'm rounding off on gold. Someone asked in the chat, where do I expect gold to close? Me personally, obviously, again, as always, this is just what I believe. I'm going to trade what I see. I think we could be closing up back in towards 3,400 this week. I believe that we could you see how we've had this sort of candlestick here. I think we could go and fill the wick of this candlestick this week and potentially head into 3,400s. I think the odds are still stacked in the favor of gold. Okay, as long as we don't go and break this structure, that we've tested already today, as long as we don't go and break this structure and this trend, I expect us to go up towards sort of 3,400, if not into 3,420, and go and challenge these highs of May. Okay, so that's, if you were to ask me what I'm looking for, that's what I'm looking for this week, and hopefully, sticky inflation, foul of talks with US and China will be enough to support gold to the upside this week. Okay, because bar that, it's a relatively light week in terms of economic calendar. We're just focusing on obviously this inflation data and these trade talks for dollar related. Now I'm going to quickly go over to Dixie, and we're going to look at some dollar pairs, because right now, we're just it's just a classic Monday trading, because dollar was down. Now we're back to flat on the day. Nothing's changed, guys. Right? As I said from previous videos and updates, we're still in that bearish structure of lower highs, lower lows. We're just in this period of consolidation. We're waiting for a catalyst to break out. Okay, if non-farms, if that jobs report was entirely bad, obviously we would have had that catalyst and we would have had this breakout, because all of last week the data was crap from the United States. I went over this, didn't I? You know, when you look here, let's go Thursday, unemployment claims jumped up in terms of the unemployment claims there. If we look on Wednesday, ISM services PMI slipped into negative territory, contracting. The US is mainly a non-manufacturing based economy. Okay, so this makes up a decent amount of their GDP. Bad. All right. ADP privately conducted payrolls number, bad. When we go to Tuesday, we had the job openings. The layoffs in this report were bad. We saw a number of layoffs jumping up. On Monday, manufacturing PMI, deeper in contraction, 48.5. So the data's bad. It's just only reinforcing my point, right? That if inflation's sticky tomorrow, it's not a good thing. It means we're talking still about stagflation, where there's no growth, stagnant growth, and high prices. Okay, so I still see dollar as being vulnerable, right? Weekly, obviously a bit of a weird candlestick there. We could feel that wick to the downside, or we could bounce, but I'm leaning towards that, given the structure remains intact here, that we're going to continue to print a new low, take out 98s, and head to the downside. If we jump over to euro, we just had a little bit of a break of structure earlier today. Okay, on the daily, things making sense for a bit of a pullback. Okay, after that ECB push to the upside. Now, obviously Jake already went over that, but it was a hawkish cut, as we called it in that stream on Wednesday, right? We got you ready for that. So that upside we saw, but now obviously that pullback here being observed, profit taking, and we've had a near-term break of structure, which I'll talk about. But we're failing to, again, I've been talking about this for a long time now, how we're failing to break down this 114 area. And then here on Thursday, we set up a bit of a reversal candlestick, evening star, closed below, and now just looking a little bit vulnerable at the moment. If we go down to the 4 hour, okay, we've obviously been printing high highs, high low, high high, high low. And then we're sort of breaking structure here. There's a near-term trend line. Don't get me wrong. There's a trend line here being supported right now. Just catching the price. Obviously, this is vulnerable to coming down. I would be very interested in terms of reloading on euro longs, potentially down here, right? You see where we've been supported in this bigger structure on the higher time frame, right? When you look on the weekly, you know, go all the way down here, high, 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 low, high, 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 low, and then still in the process of printing a new higher high. But it could be nice to see the price. It could be provide an opportunity to get in some longs down here around sort of 113.10. So that's what I'm keeping an eye on. Similar to basically what we've seen in gold, where it came down to that key trend line. You know, again, there's a big trend line, big area of support here for euro down there. Otherwise, I will wait for us to try and grind down, because this is creating a new zone in itself around 114.40, 50 area. You know, wait for something like that and a continuation grind down this top, because it's proven to be a bit troublesome. You know, we've seen it in the past there before we were able to surge through. And
Ken, would you be taking longs if the US CPI comes lower than expected?
Lower than expected?
Yeah.
Oh yes, I would.
Yeah.
Yeah,
with consensus, I think nothing changes for you, right? But if we come out lower than expected, then you'd think that we might break 1.145 level on the Euro USD, bringing it more toward upsides toward 1.15, maybe even higher than that.
Definitely. I think really that we should be going to 116, you know, take out this high up here and head to 116. I think what we'll see is there's definitely a lot of stops here, loads of stops. And I think once we get that catalyst, whether it be CPI, we'll get classic stops being triggered there. And then this should just flying towards 116, I believe. Yeah, man. Yeah. So yeah, let's see. That I think we're just going to get a little bit of sort of sideways trading all the way up until that number to Wednesday, or even today. You know, we could get a breakout today, depending on what happens with US and Chinese talks. Are you still bullish euro dollar?
Yeah, I would love to be. I'm still waiting for what happens on that very zone of 1.145.
Yeah.
We are bouncing for the third time probably. So the bounce isn't confirmed, nor the breakout. So I'm just waiting for Euro USD. I haven't traded this pair for a long time, since the US madness started. So I would love to actually, as you traded towards the long side, towards the 1.16 level. However, still waiting for some fundamentals to decide either labor market, GDP, or this week inflation to get more chances on the rate cut on September, right? Which would probably support this bull trend.
Yeah, definitely.
We'll see. We might get some data on Friday, but it's still Friday. But I think if we get also higher inflation from French and Germany, then we might also get a little bit bullish euro. We'll see, but that's still 5 days to go. So I'm not going to probably trade till we've got confirmation either of a breakout or proper bounce. If we actually gonna get higher print than what was expecting, I might be actually open to take some short-term sells, short-term shorts towards 1.13, but that's too risky. Maybe we'll see. Depends on the print. Actually, I'll wait for it.
Cool. Yeah, I'm aligned with you anyway. I'll jump over to GU. Someone mentioned in the chat, which is very true. I'm surprised you know that. Well, Abu Bakr, if I've said your name correctly. The cable. So YGU is GP dollar is the nickname is cables for traders on the trade floor years ago. And that is, as he correctly said, the cable was used to transmit currency exchange rates between London and New York. So it's a cable. I believe it is in the sea, if I'm mistaken.
Yeah, I'm pretty sure you're right.
Yeah. So yeah, it's an interesting fact there. So yeah, let's while we're talking about let's jump into cable, because obviously we've got key UK data this week. It's labour market data on where is it? Tuesday. Okay, tomorrow. Yeah, tomorrow. So we've got UK labour market data. We already know in the wages, we just spoke about it there for the United States with its own average earnings. Wages in the UK have been high. Like if you look at, we've been surpassing market expectations, generally speaking. It's remained sticky, right, in terms of what people get paid. And that in turn has kept, remember, when wages are high, we should expect to see CPI be high. So if you just look at, get your attention on UK CPI, that last reading we had 21st of May, 3.5%. Now, look, guys, educational again, okay? When you are, people always ask me, how do you trade high impact data, or how do you position for it? Like the smart money. Simple game here, right? You have to think logically, like, how I just sort of put 1 + 1 + 1 + 1 equals so on and so forth. You have to think about this. If, as I just explained, if you would start thinking, what's a good indicator of potentially anticipating higher inflation? What sort of indicators can I look at? What makes sense logically on a macro level, fundamental level? Okay. So what stimulates prices? We just spoke about that, spending. Okay. What sort of spending data can I look at? I can look at sort of retail sales, I can look at other things such as the labor market. I can see what people wages are. I can see how many jobs are being created in the market. Where's the unemployment rate? I can check out personal income, personal spending patterns. All this data is there. So just as you do technically, my technical traders, right? Where you get all your confluences, your trend lines, your Fibonacci's, your EMAs, whatever it looks like. The same thing can be done fundamentally, right? In terms of building that picture to try and anticipate, am I expecting a bullish number today, or are we expecting a bearish number? Because I've looked at all these other data points that contribute to this factor. If you don't know what contributes, guys, we have AI now, right? Go on ChatGPT and say, what data points should I look at to give me an indication of where today's CPI number is going to come out? What are the other data points I can look at? And I don't want you to be lazy, and I don't want you to be like, get all those latest data points for me. I want you to do it. The reason I want you to do it is because that's how it gets ingrained into your skull, into your brain. You have to go and do that bit of research yourself. Don't just rely solely on AI. Obviously, it's great for speeding process up. But in order for it to become second nature and you to just make decisions, you see how I just speak about things like that. That's the level you want to be, right? So you can make snap decisions. Okay, that makes sense. So anyway, do that and just sort of build that picture so you can anticipate some of these bigger numbers, right? Same sort of thing with central banks, right? These guys are looking at all this data that we have available to us as well. You can go in position of, are we expecting a hawkish, how I called that ECB decision? I said hawkish cut. Again, I'm just building the picture. You can do all this stuff, right? I'm not a genius. I'm just using data. That's it. The data's there. I don't have to go run around the economy to try and find all these data points. It's there. So anyway, I went off on a bit of a mad one there, but back to GBP labor market data. Ooh. Average earnings are expected to cool down to 5.3%. Okay, claimant count change we expect to see higher claims, unemployment claims, and unemployment rate expected to tick higher to 4.6%. So this is quite a downbeat set of data that's expected here. We're expecting less wages, higher unemployment in the UK. If we take a look at obviously GU right now, obviously on the weekly, we're still bullish. Structure's still intact here. We're knocking on the door, trying to break down this 95.50. Remember what I said earlier about, when we keep testing a certain level, I think at some point we're weakening it. Okay, there's a lot of supply here, as you can see there, sort of 35.80 to be precise. Bam, all these rejections, bam, bam. We keep challenging it. Let me just remove this a moment. if we look at structure here, on the 4 hour, I guess we are still intact. We haven't really broken structure. We're trying to break structure, but I think it's holding ground a little bit at the moment. But given the daily, I think we could have a deeper pullback back to this zone here, back towards sort of 34.50, 34.40. If those labor market figures disappoint tomorrow, yeah, we'll probably see this down here tomorrow, and I will be looking at long still at this area because it's a big area of weekly support, form of supply. Yeah, big zone. I'd like to see it retreating and then potentially reloading on those longs down here. So this is of interest to me. Unless if we don't get this pullback down here, I'll be waiting for a break retest of this sort of 35.80 zone. Okay, so I'm still bullish GU. It's just not a case of if, it's just when, well, where, which area am I buying? Am I either buying at this zone or this zone? Potentially I'm expecting to hold. So let's sort of see. Hand sitting at the moment. Again, it's Monday, right? So not a lot going on. I'm just going to jump over to now. Obviously, Jake and I know Jake's long with Euro Aussie, and obviously I was talking about these longs as well. Obviously, from a structural standpoint, it has remained bullish. The thing for me was obviously, I guess Jake's keeping an eye on this sort of 75 zone right now. I just personally, I just didn't like that we had this sort of breakout of this channel here right now, which sort of threw me off for the time being, just for now. Okay. But this is a big area here that needs to hold 75. So obviously, if that doesn't hold, then we're going to be retreating down 73s. But this is a massive zone. So you'd expect it to bounce here, but let's obviously see. I just didn't like the way we broke out of this channel for now. Threw me off. But let's see. The fundamentals, I'd say, are still more so in favor of Euro in comparison to Aussie. So we'll see what happens there. In terms of other minor effects, I haven't got a lot going on in terms of that I like the look of. I'm very active in US, in NASDAQ right now. Let's talk about NASDAQ because I'm going to be eyeing some longs.
Can I kick a quick one?
Yeah, go.
You were analyzing the Euro US dollar and also then GU. From those two pairs, the Euro and pound, as they are both kind of bullish right now against dollar, which one would you prefer? Like fundamentally speaking, which one do you think is right now heavier or stronger in relation to the dollar? I think in my view, it's still kind of Euro, but I don't know where is your stand on it. So I was just wondering if you prefer one of those two.
Look, at the end of the day, if we have to go by following the flow of money, right? All of the money is heading into Europe right now. A lot of it. The big portion is Europe, and there's a decent percentage going into Asia. Not so much the UK. There's a lot of money going into Europe. So in terms of, obviously, at the end of the day, one of my big sayings is follow the flow of money. So I would, if I'm following the flow of money, I'd have to go with Euro being more bullish. I'm going to put a caveat in this. The thing is with GBP versus the dollar, when we have, for example, risk appetite in the market, sentiment is bullish, GBP flies harder than EU. It moves faster. It has bigger moves. So in that sense, obviously, if you want to catch a bigger move in terms of capitalizing the dollar weakness, you're going to catch it in most likely in GU as opposed to EU.
Yeah, that's true.
EU just be a bit more of a safer bet.
Yeah. That's probably more safer for me as I'm a conservative trader, but I usually take swings. So I was very interested in Euro, especially right now as the CO2 report. I don't know if you guys follow it, but CO2 report, you can basically view institutional traders, like big players, where they put their money into, and I've pretty sure that it's delayed actually by a week or two, but there was, as Ken spoke about it, a big flow to Euro, and there were kind of a big number of longs added into Euro dollar. So yeah, I was just wondering between those two, which one would you prefer? But yeah, it actually makes sense that traders who like bigger moves to go for GU rather than EU as this slower kinda. So yeah. Thank you for your
good one, man. And a lot of I've got quite a good a good network of people, and you know, a lot of my people, good people, and that I know that were obviously in the UK. You know, everyone, a lot of businesses, a lot of money is leaving the UK right now for so many reasons. So there's a lot of money coming out of the UK. So in that sense, I'm very bearish. You know, everyone's packing up the bags. People going to Dubai. You know.
Do you also think it's because the tax system, like towards the rich, like how the EU, like I think it's a Labour Party. I'm not from UK, so I don't know, but I think there were some political
exactly, Jake.
tax
Like
systems applied.
Yeah,
to
the
rich
tax
people.
systems are really messed up. Like they consider the rich in this country in terms of like if you're earning over £120,000 per year, so maybe about $150,000 in terms of dollar value. And that is obviously, you know, it shouldn't really be classed as rich, but if on that bracket, you know, people are getting taxed, you know, 45-50%, which is crazy. So you know, they've got the whole system wrong. You know, politics side, they've got the whole system wrong, which is why, you know, everyone just leave in bags and going somewhere else for safety as well, because there's a lack of safety at the moment, even in, you know, very nice front and center. It's just like an everyday casual thing. So, you know, why, you know, if these taxes are not even supporting the economy with basic necessities like security for people's family, why the hell are they going to stay here? You know?
Yeah, understand.
So yeah, man.
Okay, thank you for that.
No worries. All right, I am eyeing up continued upside for NASDAQ. I know a few.
Can you hear me?
People in here are trading NASDAQ. Look at, obviously, people keep obviously are like, why are we still bullish? Yeah. Can you hear me?
Yeah, you kind of, I don't know if that's just me, if someone in the chat, because I think you lag in a little bit. Can you guys
I'm
hear?
lagging.
All good? Yeah, probably you lag a
Someone
little
said
bit.
lag.
Maybe give it a while. Yeah, I think I can hear now. Good. So yeah, let's continue. And if you'll be lagging, I'll let you know. Okay. Hello. Probably, guys. Can you hear me at least?
Jake. I think
I think now you're okay. Yeah. You're good.
Okay.
You should be all right.
Awesome. All right, cool. Yeah, so I'm still liking the idea of longs. I think we're going to get a nice little breakout for NAS at the moment. Structures very bullish. You know, go to the 4 hour. Let's quickly go to the weekly. Look at that weekly candlestick there last week. We broke out of this range where we were capped at 21,300. We broke through that. Nice big bullish candlestick here. I expect to follow through this week. Daily bullish. If we're going daily here, nice bullish candlestick. Bullish engulfing, and I expect this to pop to the upside. 4 hour bullish structure there. You guys can see it for yourself. These higher highs, higher lows, and we had a most recent higher low here. So I'm expecting this to follow through and print new higher highs. I'm literally sort of monitoring some potential scalps right now. I think we're going to get a nice little breakthrough. Look at this build up of momentum right now. You could just mark this up. You guys know I like my freaking flags. Ken loves these flags, but we're expecting this to break out. We're going to take out the open high where we've just whipped there. I believe we are anyway. And I'll be looking for basically this break retest here. Bam, bam. And I'll take some longs, some scalps in towards sort of 21,900. So this is the sort of trade I'm going to be looking out for in a moment. Something like this. Leave a bit of breathing room below and go into this high area here. Something like this I'm going to monitor in the next sort of, I guess in the next sort of 10 minutes or so, 10, 15 minutes. Structures bullish. So so apart from that, that's everything I'm involved in right now. So potentially scoping out some gold longs, and then NAS longs, and then potentially still dollar weakness. I think we're going to reload on those on the dollar shorts. yeah, that's sort of everything on my side. Yeah, man.
Okay, perfect. I think we're good to go. At least I'll have one last question, then I'll choose the winners, guys. So if you answered, just hold on for a while, and I'll just let people know those ones who will be getting the free evaluation, their usernames on YouTube, because then I need you guys to include your Instagram name into your profile description, or maybe just comment on it, just so you guys know who is going to win. I'll just briefly put down the last question until you guys answer. I'm going to write down all the winners from the questions previously. And let me just do this real quick. Okay. Perfect. Also, guys, on Wednesday, we are not going to have the usual live stream session, because on Wednesday, we are having a webinar hosted by JV, who's our performance coach. So if you're interested in trading psychology, because this is also a really big part of the trading, it's not just about charts, it's actually beyond charts, and you struggle with decision making or early drawdowns in your evaluations, when you purchase evaluation and you go immediately into drawdown, then you got devastated, emotionally speaking, and you fail the evaluation, or in case that you pretty much having a trouble to decide whenever the analysis is correct, you're still kind of convincing your mind you did everything right, you're still not opening that trade. Basically, he's going to take a point of view from the emotional side of trading. So it's trading psychology. So if you have time, at the same time as we are having these live stream sessions, he's going to have a free webinar for you. We are going to also send out an email, so just so you know, guys. Okay, perfect. Thank you so much for answering. I'll just right now collect the names, and then we get to go for the winners. Also, guys, those that I'm going to right now include in the message in the chat, either add your Instagram name into your profile, your YouTube profile, or then leave a comment with your Instagram name in the live stream session, because eventually it's going to be uploaded. This recording is going to be uploaded on YouTube. So just leave the comment there with your Instagram name if you're the winner, and I'll message you on Instagram. Okay, perfect. Okay, give me just, guys, 2 minutes, and okay, there's more. There's kind of more winners than I expected. Chat has been kind of active. So what I'm going to do is probably include them in the comment section myself at the first, and then they can reply to that. Looks like it. Okay, guys. Yeah, I'm going to do it this way because there's just too many answers. I didn't expect you to be that active and to know all of the answers. Sometimes I was even impressed by a trader who knew why cable is called cable. So what I'm going to do now, guys, is that we're going to end today's live stream session. I hope you've learned something, that we provide you with some insights and tips in your trading. And after this live stream session is uploaded on our YouTube channel, I'm going to include in the description or the comment all the winners. Okay, and then what you need to do is just please go to your YouTube profile and include your Instagram name in it, so I know who to message. I mean, those you who will win. Yeah, that's going to be probably the easiest. Give me just, guys, like 10 minutes before I do that, after live stream session ends, and you get to go to check on it. Ken, thank you very much for sharing your analysis and insights for this week.
Oh, good,
it was
man.
Very insightful, especially with the CPI coming out on Wednesday. and we'll see each other on Wednesday.
Yep.
Perfect.
Oh wait, I thought you just said the.
Yeah. We're
Jake,
going to
didn't you just say the
webinar? Yeah. We're firstly going to provide the analysis, and then Ken is going to go with the webinar about trading psychology. So traders can learn something outside the charts.
Awesome. Good day for people then. Awesome.
Okay, perfect. So
All right.
Thanks guys for joining in, and we'll see all of you on Wednesday. Look out for the winners in the comment section of the upload live stream session. See you soon.
Awesome. See you guys.